GNC's earnings are out. We have a new year, but do we have a new GNC? So this video is going to be covering the 2019 Q1 GNC earnings that was just released this morning. So if you guys have watched some of my videos before on some of the earnings recaps, I do cover the numbers, but I also make sure I give some commentary and make sure that I can draw some insights from the numbers to make sure that you guys, regardless of what part of the CPG community, retail community, anybody that's kind of has a stakeholder interest in GNC can get something of value out of this video. Revenue numbers for GNC on this quarter was about $565 million. That revenue was down about 7% year over year. Of the about $43 million loss that GNC had from year to year on their revenue, they're attributing most of this from two things. About 50%, a little bit over 50% is coming from their store optimization plan. So this is from store closures that happened from year to year. The other, about less than half, is coming from a joint venture they did on their manufacturing side. So some of their inner segment sales manufacturing revenue was down because of that joint venture. And I'll talk a little bit more about that in the video. And they did have a slight increase from their international business. So all that kind of wrapped up into about $43 million in a loss from year to year. But let's dive into this tale of two cities that I always talk about when we do the GNC earnings reports. We have the domestic side, which does count for the vast majority of GNC's revenue. They had little over $489 million in revenue. That was down about 4.5% year over year. In terms of the same store comps, that is a number that retailers use. Essentially means if there's not any, if it's not a new store or there hasn't been a refresh or something change with that store, generally over that year period, they do a same store comp number, which will give you a sense of the unchanged part of the portfolio, the real estate portfolio, how is that doing from year to year? Are they gaining customers, losing customers? GNC saw corporate-owned stores down 1.6% year over year, but they had franchise locations up 0.6%. And the last couple of reports, the franchise number has been pretty bad. Now, though revenue as a whole was down domestically, they did have operating income that increased. And they're saying most of that increase is coming from lower occupancy costs from some of that store optimization plan. They also didn't use as much marketing on the domestic side, and they're attributing that a lot to their Slim Vance line that they spent a lot of money on in 2018 for that Q1. They didn't have to spend as much because that's been in the system for over a year now, and people are a little bit more aware of that weight management private label product. But they are saying there's some offset to that gain in their profitability that's coming from higher product costs. And you're seeing some higher product costs from a bunch of different perspectives. Could be coming from input costs, from various things that could even be trickled down to tariff costs. But a lot of GNC's revenue comes from private label. A lot of those private labels are still protein products, and protein prices have been going up recently. So I'm assuming a lot of that's going to be attributed to that. Now, on the positive side of the tale of two cities, you have the international revenue. Smaller part of GNC's revenue, but it is the shining star. It's performing very well. It has been performing very well for a long time. So that revenue was about $41 million, so considerably smaller than domestic revenue. And it was up about 2% year over year. Now, if you back out some of the China, Asia numbers that was affected by the Harbin Pharmaceutical joint venture, you had international revenues actually gain $4.6 million over less than $1 million in terms of if you included the China numbers. Now, I said I'd touch on the manufacturing a little bit, the inner segment sales or wholesaling. So that big loss is attributed mostly to the joint venture that happened with International Vitamin Corporation last quarter. I think the joint venture, the investment / joint venture that's happening at this current state, 57% of the GNC's contract manufacturing, their owned manufacturing, has now moved over to International Vitamin Corporation. And then over the next 4 years, the other 43% will be owned by International Vitamin Corporation after they pay another, I think, $75 million or something like that. So in this current state, they are sharing revenues. Just so you guys are aware, some of the pricing, I think they had a set 2 years on that pricing. Then after that, some type of cost savings formula goes in place with the pricing associated with some of the joint venture savings and things of that nature. So in the near term, there's not going to be much affected on the product side for their private labels. But we'll see, we'll see long term if that does have some effect. But there are some trade-offs with some of the margin losses they're going to get. They are offloading a lot of the purchasing, a lot of the need to house a lot of that raw materials and packaging on their books. They get to shift that over to International Vitamin Corporation. So there's some trade-offs that are happening from a margin to a cash flow perspective that GNC had to make with that joint venture. Now, since we're talking about product manufacturing, I want to at least make a note about their private label. Their private label is continuing to grow. I think last year at this period, they had about 50% of the revenue that was coming from their private labels. Right now, it moved up to 52%, so they're seeing an expansion in some of their private label. They are innovating, they are creating some new private labels. It's also probably some initiatives in store that's helping that. And then the shift on some of the kind of like the exclusive partnerships. GNC are looking for those constantly to make sure they're driving different traffic, new traffic to their stores. It's a way for them to kind of diversify their customer set. And they noted, Nugenix, which has been a longtime partner with them. You see those on commercials with some of their like testosterone products, I think with like Frank Thomas and some of the other kind of older retired athletes. They noted Ghost, that you guys have heard me talk about a lot on my channel. If you have been subscribed to my channel. If you've not, make sure you guys do subscribe to the channel. I have a ton of great information that I put out on a weekly basis. And then they also were talking about a new brand that just kind of launched in this last quarter called Alani Nu. This is a Katie Hearn fronted brand. She's a female fitness influencer, has a lot of leverageable influence. She and I believe her husband own this brand, and they are exclusively they're exclusively running this through GNC and then direct to consumer. So a similar model to Ghost, but this is primarily a female-based product line. And GNC on their earnings call did note that they are going to be leaning on their partners to fill in some of the gaps in terms of where they see trends happening and where they see some of the emerging sections in terms of their merchandising needs. I think that is primarily because it's a lot of the liability off of GNC with stocking all the product themselves. They can lean on their brands a little bit, help their cash flows a little bit. So you're probably going to be seeing some new products, new brands going to be launched that are going to be more geared towards some of these emerging trends. And then one of the ones that was noted on the earnings call, was noted a lot on the earnings call, was CBD. The analysts that were asking the questions, I don't know if they know all that much about CBD, but they were definitely very interested in CBD. So I think the CEO, Ken Martindale, was pretty straightforward, as I am when I talk about CBD with clients. You don't have a crystal ball. You don't know what's going to happen in terms of regulatory FDA. There are some people are leaning in certain directions and people are tending to make assumptions on those leans, but you never know what could happen, who might want to make a name for themselves. There could be a ton of different things that could happen with that side of things. So GNC is trying to be as cautious as possible, and they were trying not to really show their hand in terms of where they thought that product map in terms of that ingredient was going to go in the future and what impact that could have on the business. Now, one area that I didn't talk about when I was discussing some of the domestic sales was the e-commerce, and I wanted to kind of break that out because that's kind of an important part of any retailer at this point, especially functional CPG, nutritional supplement retailers. A lot of the commerce has already shifted digital, and it's going to continue to shift digital, so need to make sure that any retailer has a pretty great handle on how to leverage digital within their store concept. Year-to-year revenue was flat, which you might want to count that as a win if you consider the loss in revenue on the domestic physical sales. But regardless, you're looking for expansion in e-commerce. The executive team on the earnings call noted that their Amazon business was kind of a struggle at this point. They were not winning the buy box. And I think one of the big issues right now at GNC is they don't currently have a chief digital officer. They are looking for that position right now. So not having some leader in that area is going to create some issues when you are trying to create anything digital from sales or marketing or anything in between there. I'm sure a lot of the resources are focused on trying to help the physical sales, not so much on the digital sales. So the longer they take, more behind they could get. So shifting into loyalty. Loyalty obviously is a big part. How you can capture customer data. How can you leverage that customer data to make sure that you are offering some value to consumers that are outside of just the pure play e-commerce retailers. On their earnings call, they talked about 70 million My GNC rewards members. They were talking about 1 million of the paid Pro Access rewards members. They're saying all of those customers providing a ton of data for GNC to better kind of personalize some of their marketing, some of their direct marketing. They also are talking about how that's going to continue to help some of the in-store associates with some of their technology, having tablets and things to be able to pull customer data, pull aggregated customer purchasing data, things of that nature to help them create value to the consumer, the customer experience. So again, this is gonna be a big part of all retailers, all physical retailers, to take some of that analog physical interactions and make sure that they are leveraging as much customer data, as much information, business intelligence they can, apply that in a valuable way to customers to make sure that they are getting as much value out of that purchase decision as they can. Talked a few times about the store optimization plan. GNC's need to kind of cut their portfolio of real estate. So year over year, if you're looking at this from Q1 of 2018 to Q1 of 2019, store count is down 700 locations to about 8,200 locations total globally. Vast majority of that is coming from the domestic side, from the corporate owned, and then the store within a store partnership, Rite Aid. We'll see kind of the back half of 2019 if they need to relook at the location set, relook at how to utilize some of those store locations. They are doing some of this click and collect. We'll see if they also utilize that for some micro shipping points that I think they started to mention on the earnings call for the 2018 full year earnings call. So see how those things start to roll out, if that helps their business in an omni-channel type of environment today. And then finally, the last shift I kind of want to take here is that GNC has long been kind of debt leveraged, has been one of those retailers that have been on multiple lists on to watch, are they going to make it over the next whatever period that the analyst is putting that list together for? So you're going to see a lot of conversation around cash flows or some of the debt that's due soon for GNC, and then what they can do to pay off some of that. You saw 2018 they make two large joint ventures or investments that came in from the Harbin Pharmaceuticals, which is about $300 million, and the International Vitamin Corporation, which was about $175 million. So you saw a ton of money getting infused into GNC to help pay down some of that debt. And that helped them over the last 6 months total of paying down, I think, about $350 million of that debt. They have no debt outstanding during this quarter, so they're up to date on any payments they need to make. They also were able to generate almost $70 million in net cash inflows, having more cash available. They were able to kind of, I think, extend some of their short-term credit with vendors or suppliers. So you had some inflows of cash happening, which helps them. On the balance sheet, I think they have $137 million in cash or cash equivalents. They still have cash available. They are producing positive cash flows each quarter now, but they have on their long-term debt about $888 million. So you still have a big chunk of debt you need to pay down. So they need to accelerate some of those cash inflows. Need to make sure they're focusing on profitability. So I know some of these earnings videos can be a little bit dry at times. Hopefully you guys got some nuggets of insights that came out from that. If you guys do have any questions surrounding GNC and the GNC earnings report, I'd be glad to answer any of those. Thank you so much for watching this video. If you want to help support me, make sure you guys hit that thumbs up button on this video. If this is the first time you've been introduced to my videos, would love for you guys to be a part of my community by subscribing to my channel. I upload several videos just like this weekly. And if you guys want to connect further outside of this platform, I do include all of my social media links down below. I just want to thank you guys again for your time. Hopefully I gave you some value in return, and we'll see you guys on the next video.